Hey there, welcome back to another video. My name is Struzyna with the Gunderman Group at Keller Luxury International out of the Oakland and Alameda office here in the Bay Area. And if you clicked on this video, I have a feeling that you want to know something about the supply side of the equation of our real estate market. On this channel, I've talked a lot about the demand side, competition, contingencies, etc., and done a lot of market updates from that kind of buyer consumer side. But I wanted to take a moment because I haven't really addressed that supply side, and it's a big part of the equation. It's a big part of the conversation that we're in here today, and I have some really interesting stats nationally and locally that I think are all poignant to your real estate experience here in the East Bay. So when you get some value out of this, smash that like button and subscribe to the channel because I'm going to continue to put out weekly content just like this, and you're not going to want to miss it. So let's get into this. So for any of us who have ever taken a high school or college level economics course, you know the first thing they teach you is that supply and that demand curve. At some point they intersect, and that's where a market should be at a given quantity and price, right? Let's talk about that supply curve. Everybody is saying that supply is at a historic low, and there's just not that much available relative to the buyer pool, relative to the interest rates and how much money people can spend, and that is why prices are going up. So why is that the case? It's not for a lack of effort. It's not because people aren't trying to build houses. There's a number of market factors that complicate this equation, and I want to break this down for you, give you some thoughts for how we got here today and where we might be going. So first and foremost, I'm going to throw some numbers up on the screen for you here. Beginning back in 1959, the US Census Bureau started recording housing stats. All right, and during the 48 years ending in 2006, 52,941,000 homes, or an average of just over 1.1 million homes per year, were constructed. So then for the next 14 years from 07 to 2020, only 9.9 million homes, or roughly 708,000, were built per year, which leaves nearly a 400,000 home deficit, meaning we weren't hitting that same level of construction post economic collapse, housing collapse in 07, 08, etc. So starting in 2020 alone, 990,000 homes were started, which is still well below the 1.1 million running average going back to 1959 when they started recording this data. So what does that mean? Well, it means we're behind, right? It means that we recently, over the last 14 years specifically, have not built enough home inventory to keep up with the demand side of it. So what does that actually mean? Well, we're talking about the supply side. So the supply side is simply lower right now, but what about that demand? Well, simultaneously with this shortage being built up over the last 14 years, the millennial generation, the biggest generation since the baby boomers, has now decided to start buying homes. They've shed some student debt, they're starting to make money, they're starting to get out of their parents' basements and want to get out into their own space. And as a result, that buyer pool is starting to swell in a big way and starting to want to buy homes. But because there's not a lot of new inventory having been added, there's just not a lot for them to buy in the first place. So then that begs the question, okay, why don't we just start building homes? Well, let's say hypothetically that you could start making up that deficit of that roughly 400,000 homes per year. And you look at how many were behind from the last 14 years, and you project that forward. Let's say we were able to make that up at that extra 400,000 homes per year. That still puts us 5.5 million units short over the last 14 years, and that would take, roughly speaking, 14 years to catch up, assuming we added an additional 400,000 units across the country per year, right? So those numbers don't look particularly good relative to the supply side catching up anytime soon. So that only accounts for the new construction side, right? And in a place like the inner East Bay or San Francisco or the Peninsula, where there's just not a lot of land to be developed and rebuilt unless they buy something, tear it down, and build brand new, right? But there's just not a lot of land to expand on here. So what you want to then consider is, okay, if you're not going to get a ton of new construction here to balance out the supply and demand, at least here super locally, you got to look at who's owning and who might start to turn over the existing housing demand, right? Or the existing houses. So you have to start looking at who owns the existing houses and when those might start to turn over. And as it turns out, nationally speaking, roughly a quarter of our population is made up of baby boomers. And this year they're between the ages of 55 and 75. But Interestingly, they own 42% of the existing single-family homes in the country, which is really interesting for a couple of reasons. Number one, how does a group of people who are 25% of the population own almost half of the inventory of a single-family homes? Home ownership was pushed big time during their lifetime, and they invested and they bought and they rebought and maybe kept as a rental or what have you, right? So that's number one. And number two is a lot of them haven't moved out of those houses. They've stayed put for a variety of reasons, which we'll get to later, but ultimately that's where we're at today. But why this is really important and a trend to watch, especially in a place like the Inner East Bay where you can't get that new construction build just out of the ground from nowhere, is the age bracket and the average lifespan of those people in the baby boomers is going to start playing a factor. Now, warning, this might get a little bit morbid, and I don't mean it to be, it's just simply to look at something from the numbers perspective. But when you look at the average life expectancy of baby boomers, men are expected to live for 76.1 years and women are expected to live for 81.1 years. That's just numbers. And now that generation is starting to turn 75. So in theory, some of the people at the top end will either presumably move into assisted care or pass away, and then start to, their properties and their houses will start to turn over, presumably to either the open market or through inheritance to maybe their millennial children. We'll see. But there is a large section of the single family home inventory that is controlled by a group that is very likely going to start aging out of that inventory at some point in the not so distant future, right? Their needs are going to change, they're going to pass away, their health, they're going to move in with family, whatever the case is, right? But either way, those units will start to trade hands at some point. And in an area like the Bay Area, that is something that you absolutely need to be aware of, because it will change the dynamics of what is available on the market, when it becomes available, who's going to be the buyer for it, and just the simple supply and demand curve we've been talking about, all right? Now, one other thing which I've done a ton of different videos on, and I'll link to some of those up here, is the foreclosure moratorium. There are a lot of people who have been, nationally speaking, getting behind on their mortgages, getting into forbearance, and just trying to figure something out on how to get out from behind the payments that they haven't been making. Because the foreclosure forbearance has been pushed out to the end of the year, and it takes months or even years to get through an entire foreclosure process, the likelihood that this year you're going to see a lot of foreclosures hit the market, REOs, short sales, etc., is very, very unlikely. However, 2022, that's when you might see that first push of REOs and short sales really start to hit the market, probably by Q1 or Q2 at the earliest, I would expect. And of course, I did this video, I looked at some stats from California Association of Realtors last week, and I'll link to that video up here. But the assumption is that there's going to be, tens of thousands as opposed to hundreds of thousands of units coming onto the market because of a foreclosure situation. Mostly because folks, roughly 85% of people who were in forbearance have figured out a solution. They've figured out how to tack on payments to the end. They've gotten caught up. They've done a balloon payment at the end of their mortgage with their lender. Whatever the case is, they have a solution. So those people, at least in our state, are likely not going to end up on the auction steps, especially when there's so much darn equity tied up in these houses right now. However, the likelihood is you're going to see a good amount of inventory, again, probably in the tens of thousands of units, hit the market in 2022 as foreclosure option starts to happen. So when you consider that the baby boomer generation next year will turn 76 at the top end, and some foreclosures will pop up, and hopefully some more new construction will become available, it's very likely that 2022 might be the year that this supply and demand imbalance starts to shift and pivot a little bit back towards the center, as opposed to skewing totally towards the listing side and the seller side, right? We'll see, but the data seems to suggest we might be heading in that direction. One other thing I want to point out to you is this. The cost for plywood, the cost for lumber has increased 250, 300% since the pandemic. Labor shortages are rampant in the construction industry. And I made this point over the last couple of videos, but I want to reiterate it, which is when people are considering moving into a larger home or building onto their existing home, creating an expansion, a second floor, whatever, it's very expensive to do it right now. The cost of paper, meaning permits, meaning engineering drawings, architecture drawings, etc., has increased drastically, almost double in many cases, where at least here locally, people are spending $20,000 to $25,000 before they even start to nail something into a piece of wood, right? Not only that, but once you do get through that permitting process, there's a huge premium on lumber, on plywood, on materials, on copper. You name it, across the board, there's a premium right now. Plus there's a trucking shortage, or a shortage of truckers rather. And so once you get that piece of lumber, that beam, onto a truck, it's more expensive to drive it from wherever it is in Canada or the Pacific Northwest or a port to you. And so everything has gotten more expensive, and people are spending $450, $500 or more per square foot to just do an add-on. When you couple that cost with the amount of headache that they have to go through and just living in a construction zone, it gets really daunting, right? So folks are putting a premium on that existing inventory. And when that inventory is limited and debt is cheap and people have cash to continue to invest, that's why we end up in a position like what we're at today. Now, hopefully next year, we'll start to see a bit more inventory trickle onto the market and give us that opportunity to squash some of that imbalance and come back towards the center. But let's be real, it's not going to happen fast, it's not going to happen overnight, and it's something that's going to be a reality of ours here in California and definitely in the East Bay for years and years to come. So again, once the baby boomers start to actually sell their single family assets or trade them or pass them down through inheritance to their millennial children, the foreclosure potentially starts to hit the market at some point next year, and then construction costs come down a little bit because the supply chain has been figured out, and then there's that amount of money it costs to do that addition isn't prohibitive anymore. I think that's when we're going to start to see a shift in the market, and we will have to keep an eye on that. It is not a simple solution, it's not a simple problem, certainly, but it is absolutely one to keep your eyes on. So if you're thinking about transacting, buying or selling, this matters to you. So make sure you start to do your research. I've got some links down in the description of the video if you want to check out some of the articles that I've been reading about this topic. And of course, you're more than welcome to email me. I would love to discuss this with you. My information is down below. But until then, hope you got some value out of this video. And if you did, hit that like button and subscribe to the channel, because I'm going to continue to put out weekly content just like this, and you are not going to want to miss it. So without any further ado, this is Struzyna with the Gunderman Group at Keller Williams Luxury International, signing off for now. See you on the next one.